Gold is knocking on the $4,200 door. Is it still worth hopping on? Honestly, chasing a rally now takes guts, but trying to time the top takes luck. So don't worry, let's ignore all these noises and focus on two things today. Why it's climbing and why it's moving so teasingly. Drop your thoughts in the comments now and let's take a look together. Looking at the daily chart of gold against US dollar, the trend is pretty clear. 8 straight weeks of gains with bulls firmly in control. But if you've been watching lately, you'll probably notice the rise gotten a bit bumpy. Intraday volatility is clearly up. On Monday, it just held above 4,100, and by Tuesday, it put a long upper shadow near $4,180, a clear signal that there are lots of sellers waiting there, and bulls tried a few times but just couldn't break through. So the short-term key levels are pretty clear. Watch $4,180 for a real breakout on the upside, and if there's a pullback, $1,490 is the first line of defense. Well, I'd say strength and volatility are two sides of the same coin in the market. Why the climb is so tricky? Well, the market is being driven by the usual suspects. Actually, they're just in the spotlight more than before. First is safe haven demand. The US-China tariff frictions, geopolitical tensions. You've probably seen and heard these headlines 1,000 times, but here's the common effect. Any blip of uncertainty sends money into gold, and when things calm down, people just take profit. That's what's causing the classic 2 steps forward, 1 step back pattern at the moment. And second, rate cut expectations. Powell hinted yesterday that the balance sheet runoff could end in the coming months, and the market is fully pricing in 2 Federal Reserve rate cuts this year. Inflation expectations have eased as real rates that are being pushed lower. So in short, the opportunity cost of holding gold has dropped. And of course, there's the currency debasement trade we just mentioned in last week's video. Not just the US government shutdown, political and fiscal issues in France, UK, and Japan are making people question sovereign currency credit, and gold as a hard currency naturally becomes more attractive. So my view, the path of least resistance is still up, but with news flow, tariffs included, obviously, driving the market, high volatility may become the norm in the near future. Trading in this environment calls extra patience. For the coming week, we'll still watch the US government shutdown and any real progress in the US-China tariff talks. So if we see any positive signs of government reopening, or if tariff threats turn out to be just a Tucker move, gold safe haven buying could be capped. Otherwise, high volatility upside may continue. So do you think gold will finally break through $4,200 this week? And in this very high uncertainty environment, what's your peak outside of gold? See you in the comments.